Welcome back, everyone. Thank you for being with us today. Looks like we have a loyal following for the course of today, which is very good to see. We know there's a lot of interest out there. You're probably sticking around because there's no Premiership program this afternoon. That doesn't start till next week. But there is a lot of insight and information across the course of these webinars. And when we talk about overseas property and British people buying in Spain, really people fall into one of two categories. Either they're buying a holiday home or they're looking to relocate. And relocating permanently is more complex than just buying your standard holiday home. And that is exacerbated really with issues around Brexit. So plenty to get through in this session. If I can do so without being cut off further by my orange background, which seems to be eating away at my face like some sort of flesh-eating virus. But let's move on quickly from that and introduce the panel who are with me today. First of all, Alex, welcome back. You've been on one of our earlier sessions. How did that go?
It went very well, Andy. So thank you very much for the kind invite to join. I'm really enjoying the online digital seminars. It's good to talk to people, and following that up with Zoom calls and on the 10 to 8 program is working really well, I think. And it's nice to see people. When you have a telephone call, you can connect to a certain extent, but when you see someone, face to face, laptop to laptop, there's even more of a connection. So I think it's good. So just a bit of background on my, sorry.
Carry on.
Just a little bit of background on myself. I'm an English solicitor and Spanish lawyer. My parents moved out to Spain in 1981. Spain wasn't a member of the EU then. They joined in 1985. I returned to the UK to study law in 92, and then started practicing as a lawyer in 99, and came back to Spain in 2003. And since then, I've been acting for British clients or international clients, buying, selling, and inheriting property, and doing business in Spain. And due to, after the referendum result in 2016, we've had a steady increase of people applying for residence here. So we've set up a new website called GetSpanishResidency.com. And actually, at the moment, we're acting for more than 100 people across the country applying for and obtaining residency.
Okay, thank you, Alex. And let me introduce the third party in today's panel with definitely the best head of hair between the three of us, but that's not saying a lot. Brett Hanson from Blevins Franks.
Thank you. Not many people say that to me, so it's quite nice. So yes, so I've been living in Spain now for 18 years. I'm based in Javier on the Costa Blanca. I work for Blevins Franks, and I've been with Blevins Franks for 20 years, and we basically provide tax, financial planning, and pension planning for British expatriates that are looking to move to Spain.
Great. Okay, that's a very good summary. Thank you for Brett. Right, let's dive down into some detail. Alex, you referenced the new website and business you set up. 100 people you're acting for. What are their concerns? Why are they doing it now? And what's your view of what it will be like after? Well, there's a lot in that. Let's start with how's it going now, and have people got time to get residency before the end of the year?
Yeah, so basically, Andy, to apply for residency, people have got to prove that they've got sufficient income and financial resources to live on. Typically, that means up to 9,000 euros in a bank account each, and income of about 850 euros a month.
So sorry, that if there was a couple, that would be 18,000, and then is it double the income, or is that the single income for?
Double the income as well. Double the income. Okay. Now those income requirements vary according to region. Okay, because remember we've got 17 autonomous regions in Spain, so it does vary just to make it a little bit complicated. For example, the Canaries are slightly less, and other town halls, other police stations less as well. But by and large, if you've got that amount of money, then you prove the financial resources, then need medical insurance. So if you're under the age of 65, private medical insurance from a Spanish provider, we can help you obtain quotes for that. And then if you're over the age of 65 and retired, you can apply for Form S1 from Newcastle, and they will send you the Form S1, and that will entitle you to healthcare here in Spain. And then in addition, you'll either need a rental contract for 6 months and or own a property. Those three requirements, you then register. You take your rental contract or property deed down to the town hall, register on the town hall on the census, and then you've got to be in, that they change the system on the 6th of July. We submit the application online when you're here in Spain, and then once that's approved, and that gets approved within a space of a few days, maximum 2 weeks, we then get notified of when you'll need to go to the local police station to have your thumbs and fingers printed and copied, and then basically you take a drop of a photograph of yourself as well, and then you come back in X amount of time when that's ready, usually about 20 days later, and you pick up what's known as a TIE card. And that means a card for identification of foreigners. And that will allow us, with our British passports next year, to remain in Spain for as long as you want, and to travel around Europe with your passport.
And just cutting back to one of those 3 points you said about a rental agreement or a property. So clearly, just to clarify for people, you need to be resident in Spain, you need to be living there, and you need an address.
Yeah. And the key, Andy, is that basically what you can, as soon as you arrive, you can apply for residency. The law states that if you're going to spend more than 3 months in Spain, then you have to apply for residency. It's not a choice. Okay, and basically, if Spain has the tax year runs from the 1st of January to the 31st of December. If you spend more than 6 months in Spain, then you become a Spanish tax resident, and you pay tax in Spain on worldwide assets and income. If you spend less than 6 months in Spain, you're just considered a Spanish resident, but not a Spanish tax resident. Okay.
Okay.
So the cut-off date is basically 6 months, 183 days.
Okay, I'm sure we'll come back to that in more detail. It's worth pointing out to our healthy audience of people out there who are keen to quiz you guys that there's a Q&A function on your screen, depending on what device you're on. It's at the bottom or at the top. So please do send in your questions. Janet Riley says, sorry, I missed the earnings per person per annum. Can you just give us those figures for the amount in the bank account and the earnings per person per annum, please?
So basically up to €9,000 per person in a bank account, and then income for the last 3 months of €850 each. And basically it's a cocktail of, if someone hasn't got all that income, but they've got a lump sum, then that would suffice to obtain the residency. And that money doesn't have to stay in there forever. Once you've got the residency, you can then take the money out and you can go and put it on number 29 black at the local casino.
And the proof of income, that doesn't need to remain in place, or it does?
Well, no, it doesn't have to. As long as you've got sufficient income to prove that you can live in Spain, they're fine. And as I said, once you've got the residency, you've got residency for life, basically. Well, you've got residency for 5 years, Andy, and then in 5 years' time, you'll go and ask for permanent residency. And in 5 years' time, they will basically consider if you've been here, how long you've been here. If you've been here for less than 6 months in a 12-month period, you might not get your residency renewed, which seems a bit odd because at the moment, if you spend more than 3 months, you've got to get residency, and more than 6 months is tax residency. But what they actually want you to do is become a Spanish tax resident in that 5-year period. So there is a risk that after 5 years, you might not get your residency renewed if you've spent less than 6 months in a year in Spain. And I know that is confusing, okay?
Okay, well, let's just to finish this off. Mark Dorks, who's asked a couple of questions already today, he asks, can the income come from a UK salary? It can, can't it? It can be from anywhere. Yeah. Okay. And Brett, somebody watching this decides they're going to dash out and try and get residency, but they've been living in the UK living and working in the UK all their career. They've got assets, they've got pensions. When do you get involved with that type of client, or what's the starting point for looking at their assets and transferring to a different tax jurisdiction?
Yeah, I would say that it's as early as possible that they should come and talk to us. The thing to bear in mind is that as they become tax residents of Spain, then they're going to be liable to tax on their worldwide assets in Spain. So, for example, their UK property, which may be their main residence at the moment, And if they were to sell that as a UK resident, there would be no capital gains tax payable, but as a Spanish resident, there could be capital gains tax. Likewise with their pensions, as a UK resident, you can take out 25% of your pension fund tax-free, but as a Spanish resident, you can't. It's liable to tax. So there's things that they can do before they become residents of Spain as well. So the sooner they come and speak to us, the better.
Okay, that's helpful. There was a question in earlier from Caroline Peters specifically on that. She said, is it better to sell up in the UK first or when you become a tax resident in Spain? So that is such a key point. Just repeat that one for us then, Brett.
Yes, so if it's the main residence, then it will be not liable, or most likely not liable to capital gains tax in the UK. But if you sell that as a resident of Spain, then it could be, depending on your age and also whether you have already bought a property in Spain. So if you were coming out to Spain, say now, and applied for residency with Alex now, and you became a tax resident of Spain from, say, the 1st of January next year, I would certainly consider selling that property before the end of this year as a UK resident, so then you're not liable to capital gains tax on that property when you're in Spain.
And in simplistic terms,
Andy, again, the key point is to remember, tax year runs from 1st of January to 31st of December, more than 183 days, and you're a tax resident in Spain. And because you need a property address to obtain residency, whether it's rental or a holiday, apartment or whatever, a holiday home, that then becomes your main residence. So as Brett says, if you then sold what was used to be your own old main residence in the UK, Spain could tax you on capital gains tax on that. So it's a really crucial point. But you can arrive in Spain now. So sell your property in the UK now. Come to Spain this year, obtain residency. Because you would have been in Spain for 6 months, you're not a Spanish tax resident. You don't pay capital gains tax here.
Okay, so yeah, that was my slight confusion there about a particularly tricky transitional period. So if you went now, you wouldn't have been a tax resident in 2020, because if you went now, you'd only be resident for 4 months. Therefore, you could still dispose of your UK property and not have to pay tax on it in Spain. Probably a simplification, but Brett, that would be the generalism.
Absolutely. So, I mean, I've got clients that are exactly doing that at the moment. So they're selling up in the UK before the end of this year. They're applying for the residency, but they'll be tax resident from the 1st of January next year.
Okay, so that's a window that's slowly closing.
Absolutely. Crazy.
Okay, and Caroline also asked about the capital gains threshold for tax. I'm not quite sure what she was referring to there. Would that mean more to you, Brett?
I think she's asking what's the capital gains threshold in Spain as opposed to the UK, and there isn't a threshold. You start paying capital gains tax. It starts at 19% on the first 6,000 euros of gain, 21% on the next 44,000, and then after that, 23%. Currently, I mean, obviously that could change.
And just to add to that, people sometimes ask, what are the advantages of becoming a resident? If you've been a resident for more than 3 years and you're over the age of 65 and you sell your main property in Spain, there's no capital gains tax on that. Okay.
Sorry, just say that again, Alex.
So if you've been a resident in Spain, a tax resident for 3 years, and then you sold your property and you were over the age of 65, there'd be no capital gains tax payable.
On your
and
Spanish
and to add to that, if you're under 65, under those same rules, you can roll over the gain into another property. So, I mean, there are benefits to becoming tax residents. I mean, not only if you want to spend more than 6 months here, that's what you've got to do legally, but there are benefits to it as well.
Okay, and just on a quick note for anybody who's not familiar with CGT in the UK, capital gains, generally speaking, on your first property in which you live, you don't pay the capital gain, but if you're fortunate to have second and third and possibly rental portfolio, if you dispose of those, then you get hit with the lovely capital gains tax. So does this mean that, Brett, that kind of business is booming, lots of people are coming to see you, or is there the fewer people because they're concerned, or is there a rush on before the end of the year?
Very, very busy. I mean, after the referendum, I have to admit, it was quiet for 3 or 4 months. I think people were quite shocked. But since then, it's been incredible. And it does feel like a closing down sale. I mean, it's not, but it just feels like that. Lots of people, I think, have, obviously some people can't become tax resident because they're working, whatever, before the end of this year. But it does feel, from the people I've spoken to, they've kind of sped up the process. You know, maybe they were looking to become residents or live in Spain next year or the year after, but they've brought it forward where they can. So it's been incredibly busy for us. I think the other thing to bear in mind is that for those that do move to Spain and become tax residents of Spain, because of Brexit, they certainly won't be able to continue with their financial advisors in the UK. So that's also helped us to be very busy, because we're able to provide advice both in the UK and in Europe.
Okay, and we're hammering a few of these points, but it is important, and the questions are absolutely flooding in. To clarify, Alex, can the proof of income come from a UK rental property? That's from Gary Jackson.
Yeah.
And anonymously, somebody's asked, and are you likely to have to reprove the funds in 5 years' time when you reapply for your
Yes, in effect, so basically in 5 years' time, you'll have to prove that you've had residence, that you've occupied that property for 5 years, that one or another one, if you've moved, etc., that you've had income in your bank account, you've kept a Spanish bank account, and also that you've had health cover in place. So a lot of people, Andy, health cover, it's very important to obtain, I'd say, a quote from a Spanish provider, because they're much, you need it from a Spanish provider because they issue a certificate which is used at the police station to obtain the residency. We've got kind of basically brokers on our website who can help with that. The website is www.getspanishresidency.com. And then basically, what's important to bear in mind is after you've been on the census for 1 year, you can then go over to what's known as the Convenio Especial. And if you have a look at the FAQs on our website, that's carefully explained there. But basically, the Convenio Especial means, Andy, means you go from having private medical insurance to paying in to the Spanish healthcare system. And that is €60 a month per person up to the age of 65.
Okay, so the private cover is a requirement for year one.
Yeah.
Then, in effect, you move to, probably for ease of explanation, a state system, but you still make a contribution, but it's a fixed €60 per month.
Yeah.
Okay. Obviously, a lot of this is and may well change post this year, but let's carry on with what's happening at the moment and what people can still do now. Another question on that income, it can come from a pension, can't it, Alex?
Yeah.
Yeah, it can come from a pension. And when you spoke of 90 days in 180 days that you're allowed to stay in Spain, is that consecutive days, or can you just come and go? Is that the total?
Well, Brett, we don't know for sure yet what the arrangements are going to be, do we? But if you look at citizens from other non-European countries, they're allowed to come to Spain or Europe for 90 days in a 180-day period. They'll probably be granted a visa, and they'll be able to come in and out during that 90-day period. And I suspect there'll be some kind of visa system between the UK and Europe. So, as I said, the requirements for residency next year, we don't know what they will be. We suspect the financial requirements will be higher. So governments work on a reciprocal basis. So if the UK says we're only going to allow EU nationals to come in to the UK and work and live here, if they've got a minimum earning contract of, say, £25,000, then Europe will reciprocate. And that will cut off quite a few people, I think, next year. So the financial requirements next year we expect to kind of toughen up. And although we don't know it for sure, but we expect 90 days in a 180-day period.
Okay.
I keep getting asked this question, and I think one of the things to clarify, because some people think, well, that's okay, I'll come out October, November, December, that's, 90 days in 180, and then I'll come out in January, February, and March. But of course, that's not possible. It's 90 days in 180 on a rolling basis.
Okay, good point, good point. The question in from David Stonehouse, he expects to move in November. His partner's going to join him later next year. Will she automatically qualify post-Brexit as his partner? That's an interesting one, Alex.
Yeah, so basically the new Spanish law that came into force on the 6th of July states that if you're married, that your spouse can join you later. So if it's an unmarried partner, probably not.
David,
they would have to apply next year, and they would be subject to the requirements then.
Right, I think David's about to get down on one knee. But that brings in a load of questions about your assets as well, doesn't it, Brett?
Yes, I've had a few proposals after a couple of meetings in my office, so be warned, if you don't want to get married, you might not want to come and see me, because there are tax advantages, especially when it comes to Spanish inheritance tax, because there is a liability there.
Okay, let's move on to, sorry to cut across, there's a bit of a delay there. Yeah, let's come on to pension pots and other assets that people might be coming across. So I've been working in the UK. I've got a pension, either a state pension or a private pension or a combination. What's going to happen to that if I move over and become tax resident in Spain, Brett?
Yeah, okay. Well, the first thing with the state pension, you would continue to get that. Under the withdrawal agreement, then it continues to be uprated. And what you could still get that paid into a UK bank account, or you could get it paid into a Spanish bank account, but it will be liable to income tax in Spain, not in the UK. If you've got a private pension, similar situation, you can keep it in the UK. Obviously, those are always going to be paid to you in sterling, and you're going to be living in Euroland. So you may want to then come and talk to us about that. But you can keep your pensions in the UK. It's not where they're being paid, it's where you are living, so which is down to the tax. So if you're a tax resident of Spain, wherever that pension is being paid, you're going to be paying tax on it in Spain, not in the UK. There is one exception when it comes to pension, and that's where it's a government pension, like a teacher's superannuation pension or local government pension, whereby that would be liable to tax still in the UK, and you'd have your UK allowance.
Okay, and if in the majority of cases then, if I've still got a UK pension, it's paid out in the UK and I take it to Spain every month, I'm taxed in Spain, but I'm not also taxed in the UK, am I? It's just a single tax treatment in Spain.
That's right. There's a double taxation treaty in place. Where that applies when you're tax resident in both countries. But I mean, look, if you're tax resident in Spain, you will pay tax on your worldwide assets in Spain, not in the UK. There are a few exceptions, but you don't pay tax in both countries.
Okay. And Andy, just to add to that, and this might be your exceptions, Brett, and I think it's quite important to raise this. If you were employed in the civil service or by local governments, if you're a nurse, teacher, fireman, then your pension will be taxed at source at 20% in the UK, and then so basically the UK taxes that and issues a certificate on a yearly basis confirming how much tax you paid, and then that is shown to the tax authorities here, and let's just say the applicable rate in Spain was 25%. You'd only pay the extra 5% in the UK, in Spain. So the extra 5% would be paid in Spain. That's if you worked in local government. So that's the kind of only difference I'd say, Brett. Yeah.
Yeah, that's the exception that I was talking about. Yeah.
Okay. And Colin Underwood asks, if retiring to Spain, do pension pots and savings count towards income? Well, I think we've covered that. If you've got a regular payment coming in, that counts towards income. And what extra would you need towards your annual requirement? Okay, I think we covered off most of that that one, Colin. What about a question here from tax on worldwide assets? Brett, right up your street. Give us your sort of overview or insight as to what you advise people here. We've got one from, well, no name given, but should I transfer all my assets to Spain or keep them in the UK? I know it's hard unless you get some more detail on what they are, I guess, but just give us an overview.
Yeah, so a couple of things there. It talked about worldwide tax. I don't know if they're actually referring to wealth tax. So Spain has a wealth tax. They total up your worldwide assets each year and they tax it. You know, regardless of whether it's producing an income, it's a tax on wealth. Now there are allowances. Each region of Spain has their own allowances. In the region that I live in, you have 300,000 euros on for your main residence, and then a further 600,000 in this region for other assets. The state's rules are an extra 700,000. So, and you know, once you've got assets over 2 million or close to 2 million, you then pay wealth tax. With regards to bringing assets into Spain, I wouldn't necessarily recommend that. What I recommend is that you use structures, and there are structures that you can use to minimize your tax in Spain. But the problem that you have when you bring your assets into Spain is that they're going to be liable to Spanish inheritance tax. Whereas if the assets are kept outside of Spain, for example, and are then left to maybe children that are not in Spain, there wouldn't be Spanish inheritance tax. So I think the best thing to do is that they come and talk to us about that, because it's important that you get it right.
Yeah, these are quite complex structures and everybody's situation is going to be highly personalized. So yeah, we'll give a bit more information of how to contact you later on, but I think that is the best way to go. What are the personal tax allowances in Spain, Brett? That's a question in from Mark Carter. Yeah,
so for income tax, I believe at the moment it's 5,550 euros. Alex, you've probably got a bit more information on this than me.
Yeah, I was under the impression that you started paying tax when you start to earn more than 12,000 euros.
Okay.
That depends on whether it's one source and things like that. I mean, this is quite this is quite complicated, and it does depend on how many sources from what sources your income comes from.
Okay.
And sorry, Andy, just to cut in there. So what's important to bear in mind for everyone listening and watching is that there's 17 different autonomous regions in Spain, and each region has their different income tax and wealth taxes. So it's very important for you to, we carry this out for clients to use with our recommended accountants. If someone says to us, how much tax will I have to pay? Well, then we'll introduce them to an accountant, and I'm sure Brett can do the same. Introduce them to an accountant, and they would calculate their tax liability on worldwide assets and the income, etc. So I think, and it's very, when you've got significant assets, it's very important, or any assets really. It's important to plan your move carefully, so that you arrive in Spain with a clean bill of health, and you know exactly how much tax you may or may not have to pay.
Yeah. Okay.
Yeah, I think one of the things, just quickly on that, because I think it's quite important, you've just got to bear in mind that, you've got to switch your mind, because you're so used to being in the UK and paying tax in the UK. So you think, well, ISAs are tax-free in the UK, they're probably tax-free in Spain, and they're not. So it is very important to talk to someone about it. It's very different.
Well, that is very perceptive of you. I was just going to say, Scott Whitehead asks, if you live in Spain as a tax resident, can you still open and use an ISA in the UK?
So the answer to that is, once you're a resident of Spain, you can't add to an ISA, you can't open an ISA. You can keep your existing ISAs, but they will be liable to tax in Spain. Okay,
and Lorraine North, Alex asks, if we live in Spain but rent out UK property, what are the tax implications? Well, she says pre and post Brexit. Let's just explain what the situation is currently.
Okay, so the situation now is that basically, if you own a property in the UK, you can apply for what's known as so you own a property in the UK, but you live in Spain. you can apply for a non-resident landlord's certificate. Okay, so speak to your accountant in the UK about that. And then depending on the income levels, you won't pay tax in the UK, I believe up to £12,000, okay? But you've still got to declare that income in Spain. So when you become a resident in Spain, each year in March, between the 1st of March and the 31st of March, you've got to declare any assets that you own outside of Spain over the value of €50,000. And that's called Modelo 720. So so in effect, you don't pay tax on it, you've just got to declare it. And then all the income that you generate from properties in the UK or from shares or whatever income you get from the UK, you've got to declare that in Spain. Remember, so if you arrive on the 1st of January next year, you live in Spain, lock, stock and barrel, or you've moved to Spain, lock, stock and barrel, you're going to become a tax resident in 2021, and then you've got to submit your annual tax return between April and June 2022.
Okay, thank you. A question here from Andrea Clayton, probably best for you, Alex. If I plan to move to Spain with my parents who are both retired and have pensions, I don't plan to work, but I have an income to show. I won't have an income to show. How much of a lump sum would I require? Well, I guess that comes back to where we started. She would need proof of income for herself, wouldn't she?
Yeah, and we can speak to her about how to present that paperwork to the authorities.
Okay, all right. We've had half an hour on there on relatively small subject area, but we have delved deep, and it is a very complex area. For people wanting to put more questions to Alex and to Brett, if you head over to the website address that you can see on my screen and go to Meet Our Exhibitors page, then you will see a tile there or a panel.
And are you taking us through that? Because I can't see that on the screen.
I wasn't at the moment, but I will do at the end.
Okay, sorry.
And no, well pointed out, because I have made that mistake before. It's good that you're listening. Yes. So did you see where he jumped in when I was about to give out your web address there, Brett? So that's Blevins Franks over on our Meet the Exhibitors page, and some guy called Alex Radford from My Lawyer in Spain.
I much appreciate that, Alex and Andy.
So what do we know about the post-Brexit era? I mean, we're keen to point out to holiday home buyers that very little is likely to change, and the hope is that there will be a sensible agreement reached, and clearly the Spanish government doesn't want to jeopardise the income generated by British homeowners, so residency applications will still be able to take place. The drawbridge doesn't come up, but it's going to be different, isn't it, Alex?
Yeah, it is going to be different. I mean, just so everyone's aware, the purchase costs, the buying process, that is not going to change. A British person buying, a Spanish person buying a property here, an American, all the costs and the processes will be actually the same. What will change, as far as we're aware at the moment, is that, for example, if you rented your property out, at the moment you've got to declare that income in Spain, and you pay tax on that income at 19%. Deductible costs are the proportional costs of the rental, so such as management costs, water, electricity, marketing, etc. And as a European Union member, 90% of those costs are deductible. Non-Europeans, Americans, Australians who rent their property out, they pay tax on that income at 24%, and those costs are not deductible. So unless we see anything in the withdrawal agreement, and we've raised this point with the British Embassy and the British Consul, so locally across Spain, there's been a lot of outreach meetings with the British Consul, and we fed all the kind of discrepancies and issues that our clients are concerned about to the British Embassy. So, and I know that's been fed back to the negotiating teams in the UK. So that's the only, I think, difference. What would that mean? Basically, rather than paying, it's an extra 5%, and obviously some of the costs aren't deductible. But I think that's probably the worst of it, Andy, at the moment. Brett, any ideas?
Yeah, I would agree. I think there's also potentially inheritance tax, because inheritance tax, it can depend on whether the recipients are EU. So there are some nuances, but it's very hard to say. I mean, we get asked this a lot, and you know, we just don't know. But you know, people have been moving to Spain way before Spain was part of the EU, and etc. You know, before there was even an EU, so to speak. So we think it will continue. It's just that, yeah, it will be different, and as soon as we know what that is, we'll certainly be putting information out there.
Just to clarify, Andy, I mean, when the referendum result happened in 2016, we did expect that inheritance tax allowances would be different, okay? Because Spain basically used to treat Europeans and non-Europeans differently. And then they got their knuckles rapped by the European Commission. They then treated all Europeans the same, but they continue to treat non-Europeans differently. However, we've seen numerous court cases arguing discrimination. So basically, you know, father dies, son lives in Ecuador, and the daughter lives in Spain. She may not pay any inheritance tax, and he'd pay, you know, he'd have a massive whacking bill. And they, again, the court cases are found against Spain. So any Europeans and non-Europeans we're treating, when it comes to inheritance tax, we're treating them exactly the same as Europeans. So I don't think, Brett, that will change. I think the greatest concern is basically the tax and some of the costs that you can deduct when renting for the moment, you know.
Okay. And why would it be legitimate to impose a different tax treatment on a rental income rather than a inheritance income?
Listen, fantastic question. And that's one, you know, if we can put together a crowdfunding page, we could argue a defense about that and take that to the European Commission next year, Andy. Okay,
we have quite a few people on here who might be interested in that sort of thing. We're going to try and whiz through some more questions here. Catherine Walsh was asking about the 17 regions referenced and the differences. There are differences, but do they differ hugely when it comes to tax treatment? Brett?
I specialise in this region. I'm familiar with other regions though. Inheritance tax in particular can be quite different, the allowances. If I look at the income tax rates across the board and wealth tax rates, not too different, but certainly in regards to inheritance tax. You know, there's a bit of a competition, it feels like, when it comes to each of the regions with inheritance tax. They're trying to bring the inheritance tax down to attract more people.
And where would Catherine go to find out that information? I mean, clearly, we're going to mention your company names again, but just more generally, how would she go about finding that?
So sorry, Brett, go on.
Oh, no, you go, Alex, you go ahead.
So, Andy, we set up a website called inheriting-assets.com, and on that website we've got the tax tables, the inheritance tax tables for the major regions. Okay, so just to give you an idea of the differences and how it's calculated. In Spain, if you leave your assets to a blood relative, then they have a personal allowance. Okay, so in Andalusia, father leaving assets to son, up to €1 million in allowances, and then they have a discount of 99% on the inheritance tax liability. Other regions, for example, the Valencian region, you know, where lots of British people live, Costa Blanca, there's only an allowance for direct blood relative of €100,000. So I think when we act for clients buying property in Spain, we talk to them about ownership options, whether or not, you know, are they going to move to Spain? If they are, then I'd recommend they buy it in their name. If they're not, then they could consider buying it in their children's name if the children are over the age of 18. And then also, you know, and on the back of that website, we set up yourspanishwill.com, so we can put in place a Spanish will to mitigate Spanish inheritance tax. So moving to Spain is, you know, planning your move and then thinking about, you know, what happens when you do pass on. And what happens also if you become ill or you can't manage your affairs? So in the UK, typically a lawyer would put in place an English will for you and also a lasting power of attorney. And we can do that in Spain as well. So we regularly put in place powers of attorney for elderly clients who just want to maybe give a power of attorney to a loved one or trusted friend or family member to manage their affairs if they can no longer manage them.
Okay. And there's a question in from Scott Whitehead about disposing of a business outside of Spain. Would that be recognised just in the year of the disposal, Brett? Is that how it would be reported?
That I don't know the answer to. I would recommend that he seeks specialist advice. So I would need to know more about the company and things like that.
Okay, fair enough. Alex, a couple of questions in from teachers who must be out there watching. Can you just repeat what you said about the exception when it comes to well, actually it was Brett who started off on that one. Brett, can you come back on that, on teachers' pensionable income and how that would be charged in the UK?
Yeah, I mean, my understanding is that that's liable to tax in the UK, that you would get your UK tax allowance and then you pay tax on it in the UK, but then in Spain, that's also looked at, and any difference, if it's more tax due to be paid on it, that would then be liable to tax in Spain.
I think that's what you were saying, wasn't it, Alex? If it was 20% in the UK, but your residency rate in Spain was 25, then you'd pay the balance of the 5% to the Spanish government.
Yeah, and you've got to think of it this way. And years ago, Denmark introduced a similar scheme. So basically, you know, the governments employed all these people throughout their working lives, and they move across to Spain, and Spain gets the benefit of taxing that income when they were former government employees. And basically, there's been a agreement between the European members that actually will, the home country will take the first 20%, and the country where they're resident takes the balance.
Okay, thank you. Tracy Collishaw asks, we've sold in the UK and we hope to purchase a property in Spain, but continue working in the UK for the next 12 months. We'll be renting in the UK. Can we still apply for residency?
Yes, you can, yeah.
Even without being resident in Spain?
Well, basically, you know, you come to Spain and you apply for residency, okay? If you only apply for residency in Spain if you're going to spend more than 3 months here, okay? So that if you're going to spend more than 3 months, apply for residency. If you're going to not live in Spain for 12 months, then don't apply for residency. But the flip side to that, Andy, is the requirements are probably easier now to get it. And once you've got residency, you've got it for 5 years.
So you could do what that lady said and start the application process, come back to the UK, carry on working and just making sure that you were spending the requisite time in Spain and continue that application process.
Yeah, but the residency process now is 3 stages. So you've got to be here we can present it online, but you've got to be in Spain when we present it, and then you've got to go back to the police stations twice, one to give you thumbprints, and the second time to pick the actual residency card up, which is known as a TIE, and it's basically an identity card with a chip in it, etc. Okay,
thank you. Annie Pollard, Brett, asks, does civil partnership count the same as marriage?
In some regions, I believe so.
Okay. Alex?
Yeah, I do believe that to be the case. So when we act for civil partners who buy a property, we put in the deed, you've got to put down their marital status, and we put down married. Okay. But most of the regions we operate in accept that. Yeah.
Okay. A big question from Nick Stevens, which unfortunately in the 3 minutes left remaining, we don't have time to go into too much detail. And sorry, we've gone into so much granular detail on some of the other stuff, but it has been fascinating. Nick Stevens, Alex, asks, with regards to wills and beneficiaries, what do you advise? So let's just think, buying a Spanish property then, does it make sense to make a will in Spain?
Definitely. So you know, Spanish will for Spanish assets, UK will for UK assets, and they work closely together. If you update your English will, let your solicitor know that you've got a Spanish will. And because the first clause of an English will states, I revoke all former wills. So I revoke all former wills, except my Spanish will dated X. Excuse me. And the best, the Spanish will process is really good because, excuse me, we prepare the wills in English and Spanish. They're signed before a notary over here. The notary holds onto the original signed version and issues a first copy. And then, basically, if someone passes away, then the heirs using the death certificate will go to the civil registry and ask for what's known as a certificate of last wishes, and that will confirm where that last will was signed, and then they can go obtain a copy from them. So the system is really quite robust because you don't have any faffing around of where's Auntie Bunty's will, is it in where is it? Is it in a drawer, a safe, or what? Here it's we know if a will was signed, we know exactly where it is.
We could all do with a wealthy Auntie Bunty, couldn't we?
Have you got one, Andy?
No, I'm afraid not. No, yeah. Nobody showed up yet. Anyway, so okay, let's just have a quick look at our website over here, which is our new event website, which is placeinthesundigital.co.uk, where all of you will have been to sign up to this webinar. Over here on our meet our exhibitor pages, we have our exhibitors by country. So in this Spain section, we have Blevins Franks. We also have my lawyer in Spain. And if you wanted to speak to Brett and quiz him further, or even just have a look at what Blevins does and what they have to offer in terms of their services, then this is the Blevins Franks page. So it's got information about the key services that they offer. It's got how to book an appointment with them. You can see that there's availability, not tomorrow, but there is next week. Go into there, put in your details. I'm going to book a meeting with you, Brett. I hope you're good for it. That goes off to Brett and his team, and they will email back a confirmation which comes with a link to Zoom. And here's some really good videos here from Blevins on retiring to Europe, pensions advice, inheritance and estate planning, a number of videos there. And there's a lovely picture of Brett and his equally attractive colleagues, and a number of brochures there that can be downloaded as well. And the same goes for Alex. Alex at My Lawyer in Spain has a page over here, and you can make contact with both of our panelists via the website. So thank you both for taking part.
Thank you.
I think there've been more questions for that session than any other. Sorry we haven't been able to get through all of them, but we did get through a good number. And all I can suggest really to everybody out there who would like a question answered is to direct your questions to these guys who know, and hopefully they can find an answer for you. So thanks again, guys. We have our last session coming up in 15 minutes. This is just all the panelists who've taken part today. We'll all be on screen, and why not come along and ask your question there, and we'll see what we can get through in that last open general session. So good stuff. Thank you, Brett. Thank you, Alex. Thank you everyone for listening in, and bye for now.
Bye now.